Hello, welcome to episode 3 of our deep dive into the American healthcare system series. I feel like we might need a new name there, where we are on a journey to understand the American healthcare system so that we can fix it. Because you got to do one before the other, and it certainly needs fixing. I'm Liz, I am a family nurse practitioner, and I recently left my job working in primary care because most of my patients couldn't afford the care that they needed, and it made me really sad and really angry. And just from talking with people, a lot of people feel the same way. There's a huge frustration in healthcare workers, especially where this is just overrunning everything. And that's why this series was born, to go on a journey to kind of understand what the past of our healthcare system was, the current situation, and just understand it really well so that we can make more informed decisions going forward. In today's video, we are going to be learning about the Affordable Care Act, a very, very confusing 906-page law that was intended to expand healthcare to millions of uninsured Americans. It implemented measures that would lower healthcare costs. It tried to improve healthcare systems efficiency, cover more things for more people. And my goal is to learn about the Affordable Care Act and share that information with you, because even working in healthcare for over a decade, much of that law and the act is really unknown to me because it's written in a way to be confusing, and it's not like they don't teach us about this in school. But we can do hard things. We can understand the Affordable Care Act, friends. And by that we, I mean my sister, who does a lot of research for me. She's going to help us understand it, and I will add snarky remarks, and then I'll relay them to you so that we can all understand this aspect of our current healthcare situation a little bit better. Since the Affordable Care Act is like a beast of a topic, I will be making several videos on it. And this is the first, where we will look at why the Affordable Care Act was created, what its initial implications were, some of its flaws, some of its benefits, because it's certainly not perfect. I feel like we all can agree on that. So let's take a deep breath and dive in. Alrighty, so the first 2 episodes of this series, we looked at some examples of just how easy it is to lose insurance in the United States, or to be underinsured, or to be unable to afford insurance at all, even if you're working full time. And we've looked at a very broad overview of the history of health insurance in the United States. Today, we focus on the Affordable Care Act, starting with why and how did it even come about. Oh, and P.S., there's a lot of information in here, so please feel free to use the timestamps in the description to help you navigate if you are only interested in one specific area, or to get an outline of kind of the topics we'll be covering. All right, now, for reals now, take a big breath. Let's dive in. The year was 2008. It was a presidential election year in the United States, and I felt very fancy because I was not only the height of fashion, as you can see, but I was also going to be voting in my first presidential election. At least of my life. I mean, there had been more, but this was my first. The opponents in this presidential battle were Barack Obama and John McCain. Now, to kind of set the scene for you, in case you don't remember 2008, I was blissfully enjoying college. The rest of the world, though, was experiencing what is now called the 2008 global financial crisis, which was about as fun as it sounds, and it lasted a lot longer than 2008, as we'll talk about. This global crisis obviously affected the United States because we are part of the world. And many described this entire situation as the greatest recession since the Great Depression. The great one. And all of this is only to be recently topped by COVID, which means if you are my age, you graduated college and then tried to find a job in the second largest recession since the Great Depression. And when you finally got a job and you started to build a life and have children and a family and all those things, a global pandemic happened. And we experienced another unprecedented largest recession in many people's living memory. Cool. Everyone, you are just doing great. So we're all going to be fine. Keep going. I digress. I promise all of this is relevant. As we discussed in the previous episodes, in the US, our healthcare insurance largely is linked to employment. You either get it through your employer or you don't. They don't offer it, and you have to go buy it yourself. And depending on the plan your employer picks, if they offer one, like I said, at all, you may be paying thousands out of pocket on top of your normal monthly payment, because you pay monthly and then you have to pay again until you hit a certain point, and then the insurance company starts paying because, deductibles. And we will do a whole episode in the future explaining deductibles and like how insurance actually works, but that's not for today. If you aren't familiar with the concept, we can do a brief rundown. Basically, there's a price threshold that you have to hit before your insurance will pay for anything. Mine is currently $7,000. So we pay $500 a month, and then if we dare use our insurance that we pay $500 a month for, we have to pay $7,000 before they pay for anything. It's great. But as you can easily imagine, having a system like that, when the world becomes, it falls into financial chaos, unemployment's going to skyrocket, inflation, stops by to say hello, making the money you do have, if you still have a job and are bringing that in, less valuable. And you are now so desperate to find a job that you will take one at a lower salary because something is better than nothing. At the same time, companies are panicking because global financial crisis, so they raise prices. And thus, we have a whole lot of Americans who can no longer afford health insurance because insurance raised the prices, but the Americans are not making more money. This massive loss of health insurance was identified by, it was a problem, then everyone knew it. It was identified by the presidential candidates, and one of the big campaign things they needed to address in this election was, what are we going to do about it? The healthcare had kind of been floating around as an issue on campaign trails for a long time, but no one had actually done something about it, and this was the first time we were really seeing people be like, oh, the stress has hit us. We need to do something about this. And we really saw it tackled. So what were the two things that we were looking at? So McCain proposed an open market consisting of privately owned companies that would you would pick between them. You would get tax credits if you qualified for them in order to help pay for your own coverage if you were unable to afford it. And Obama proposed what he described as a universal health care plan, where people would be able to acquire a health insurance plan on a platform that was government run and privately owned, kind of like we see today. And it had a lot more, but essentially the bottom line was everyone was going to be able to get coverage even if they couldn't pay for it. There's more details there, but it doesn't really truly matter because Obama won the 2008 election, so we got his plan. So we won't waste time. And his plan became the Affordable Care Act. Now, are you ready to dive a little deeper? Let us look at what changes the Affordable Care Act made when it was implemented. So, the Patient Protection and Affordable Care Act, often shortened to the ACA and nicknamed Obamacare, was signed into law on March 23rd, 2010. We will be calling it the ACA from now on because the name is very long and we've known each other for a long time, the ACA and I, so we are on a nickname basis. So we will go with that. And I do plan on making a video all about how the bill was passed because it was very dramatic and a total cluster. So subscribe to see that, friends. That will be coming. It's going to be a wild one. We won by literally one vote after people died, replacements were shoved in, some shisty things happened. And that's how it got here. Anyway, so the ACA was passed despite all of these things, and it's a thing now. What does it do? In short, the ACA requires every American to have health insurance and provides assistance to those who cannot afford a plan. But that's a pretty big order to accomplish, so it was designed to be rolled out in a few phases. Changes were going to be either made, there were some that would be made immediately, some needed to be complied with within 90 days of the bill becoming law, some needed to change with 180 days between signing and 180 days later, some needed to be changed by 2011, which was the following year, and changes all had to be completed by 2014. So here, let's kind of break them down and I'll walk you through what changes happened when. So let's really quick look at what happened the day it came out, March 23rd, 2010. First, anyone who had already purchased a health insurance plan by this date had grandfathered status. The grandfather clause allowed current plans to stay the exact same as long as their insurer continued to offer the plan. So if you already had insurance before this day, nothing was going to change for you at this point. For now, you keep doing you, friend. But what if you didn't have insurance at this time of the law being signed? The immediate change was that anyone who bought a health insurance plan after the ACA went into effect on March 23rd, 2010, they would eventually have to enroll in a new plan that met all of the new standards of the ACA. They had until January 1st, 2014 to do this. So basically, if you needed to get a new insurance plan or change insurance, or you got a new job, that new insurance would have to be in compliance with the new guidelines set out by the ACA by 2014, and we will go over what those are as we go through the whole rollout. So in reality, at that initial signing date, nothing changed. It was basically coming out and saying like, hey, if you already have it, we're just not going to touch it for now. And if you don't, by next year, you have to have something that follows our guidelines. So let's look at the next stage, what happens at 90 days post-signing, because some things start to happen here. By June 23rd, 2010, some small businesses now qualified for tax credits of up to 35% of premiums offered to their employees. The same date also saw $5 billion allocated for individuals who could not qualify for health insurance due to their current income level, but also could not afford to buy it. So they're in that gap where they don't qualify for Medicaid, but they also can't afford it. These funds would allow them to buy insurance from the government instead. And the third thing was that by this day, there was a temporary reinsurance program that was established to reimburse participating employment-based plans for a portion of the cost of providing health insurance coverage to early retirees. If that didn't make sense to you at all, that's fine. It didn't really make much sense to me either. We will touch base on it at a later time. It's kind of a mess, not shockingly. So just consider it a fun fact. And I'll remind you of it when we talk about it later. It honestly, it doesn't matter that much. So those things were like, fine, honestly, quite boring. But a week later, July 1st, 2010, was the first really groundbreaking thing that happened, in my opinion. This was when pre-existing condition insurance plans were designed, and they were basically put out there to make health insurance available to people who had been denied coverage by private insurance companies because they had pre-existing conditions. So what does this mean? At this point, just wait. At this point, if you had a pre-existing condition, like let's say you had the nerve to be born with a heart condition as a baby, your health insurance could literally just say like, oh, you are already sick. We will not cover you. And it was fine. They just said, oh, I get it. Like that baby's going to be expensive. Or they would like skyrocket the prices, but most of the time they just said, no, thank you. So basically all of the people who were sick couldn't get health insurance to help pay for the management of their illness. And insurance only took on healthy people, which just make it make sense. This policy basically came in and said, like, we're going to make something for like a health insurance policy for people who have pre-existing conditions like depression, postpartum anxiety, things that a lot of people have. This was still not like ideal because it was very expensive, but it at least gave the people who had the privilege of being able to afford it some type of option instead of plunging them straight into bankruptcy, which was their option before, for having the audacity to have a medical condition. I just can't. All right, let's jump forward to the requirements in place 180 days post signing the ACA. First up, we have seniors are entitled to a $250 rebate to close the Medicare Part D coverage gap. Let me break that down for you real quick in case you aren't familiar with what that is. So Medicare is the insurance that most older adults have. Typically, you can qualify for it when you are 65 years old, and it will help you pay for your visits to healthcare providers and your medication. But with medications specifically, it has what is called a donut hole, or I think they call it a coverage gap, which means after they've paid for a certain amount of your medication, Medicare stops paying. They're like, that's enough. You don't need any more of that. For the sake of argument, let's just lay it out like this. Let's say when Medicare has paid $400 of your blood pressure medicine or whatever medicine you're on, they've paid $400 towards your meds. They decide that you are done for the time being. And that's it. They're like, I'm not going to pay any more for that. And now the patient is responsible for the cost of their meds. Keep in mind, most of these patients are retired and they're not really bringing in a lot of money. So they have to pay for all of their meds out of pocket until a certain number is hit and they've paid enough money, and then Medicare's like, oh, you must be really sick. We'll pick it up again. The pick back up number, it varies by plan, but it's usually a few $1,000s. So let's say $5,000 for today. It goes up much higher than that. So they paid the initial $400. Once the patient has paid $3,600 on their own, they have now reached the other side of the donut hole, and Medicare has deemed that, oh wow, we will pay for this again if they're still alive, because they might have run out of meds. Many individuals could not pay this, shockingly, once their coverage ran out, because remember, they were retired. So they just stopped taking the medication until the next year when their coverage started again. And you can imagine how that goes when you were taking medicine that you were probably on to keep you alive. So this rebate was basically a way to give Medicare participants a little bit of help getting from one side of the donut hole to the other. It obviously didn't cover the whole cost of the out-of-pocket expenses, which could be thousands of dollars, but hey, they tried. They threw them a bone. They're like, have $250, I guess. Other than that, what changed at the 180-day mark was a government website was created to allow people to search for information about health insurance companies, available plans, and other essential facts so that people knew what they were getting. Because before that, it was very convoluted. You didn't have to list everything. This kind of helped you compare them a little bit so that since you were buying something, it basically let you know what it was. So that's always nice. I like descriptions. Insurance companies were also no longer allowed to exclude coverage for children with pre-existing conditions. So the baby with the heart condition, like they would cover it for a little while. And if you have diabetes and you are a child, they will now help you out with that until you become an adult, in which case it's now okay for you to die because no one will give you insurance by the time you get to be 18 because you have a pre-existing condition and you're not a child. The pre-existing condition is now apparently evil. That you're 18. It all just changes. So that's cool. And that's kind of what happened with that one. Let's jump ahead to the new year. What needed to change by 2011? Surely in 2011, we would allow adults to have medical conditions, right? No, friend. No, they don't do that yet. So what did happen? First, a provision went into effect that protected patients' choice in choosing their healthcare provider. You now get to pick the person who is in charge of your health as long as they are in your network. How kind. Are you kidding me? We did before they could just assign it to you. So now we get to choose the person that we're paying to give us healthcare. Specific of this also included plan members being able to pick their primary care provider as long as they were in network, and prohibiting insurance companies from requiring a prior authorization to see an OBGYN. So basically, acknowledging that taking care of your cervix and your uterus was no longer automatically denied by insurance companies, which is always good, and it requires insurance companies to include some kind of access to emergency care. So they unfortunately could still slap whatever deductible they wanted on it. Like mine is currently, I can get charged up to $13,000 when I visit the emergency room, but at least they had to cover it in some way at some point now, which is great news because 0% of people plan their emergencies. So it's really great to know that they can now have those emergencies. Good. Moving on. Ready for some legit good news? Because I feel like we need some. The 2011 changes expanded coverage for young adults by allowing them to stay on their parents' insurance until age 26, even if they are not a full-time student. Prior to this, you could only stay on your parents' insurance if you could prove that you were a full-time student after you were 18. I know this because I went part-time one semester and I lost my insurance. I was working full-time. I was a waitress at Chili's, but they were like not giving out insurance at the time. They were like, no, thank you. We'll just opt out. This coverage expanded and was very helpful because remember, we were in the largest financial crisis since the Great Depression, and lots of young adults couldn't find jobs. Prior to 2011, this would have meant that they basically had no hope of healthcare coverage. You can't have a job, you can't be covered. But now, if you were fortunate enough to be born into a family who was in a current financial situation where they were stable enough to be able to have a job and have health insurance, they could still, as a young adult, benefit from this. This doesn't really help individuals who were living in families who also didn't have insurance or who got laid off. and then lost their insurance or were estranged from their family, or their family just wasn't supporting them. So it helps some people, but certainly not all. And it comes back to my favorite American motto for these things,
which is just don't be poor.
How simple. I could do this. Moving on. Also, starting in 2011, health insurance policies must now cover preventative care and pay a portion of all preventative care visits. So this was huge. As a family medicine nurse practitioner, a huge part of my job was helping patients navigate their preventative screenings. Things like mammograms to detect early breast cancer, colonoscopies to detect colon cancer, immunizations for children and adults, all that stuff. It was now going to be covered. So that's great. The only thing I dislike about this one in particular is that it still didn't cover the actual visit, just the procedures. So you could still pay a few $100s for the visit in order to obtain these things. Again, another video that will come is like going over how we bill things. But the health insurance companies would now be able, they would be forced to at least pretend that they are trying to do something beneficial for your health, which only seems fair after all, because don't forget, if you do get sick, maybe from a lack of preventative care, or if you dare get a new job, or you move, or you need new insurance, they can deny you now, because now that they didn't take care of you in the beginning, now you have a pre-existing condition. So that's good. Back to the good news. The ACA now has some limitations on what kind of limits insurance companies can place in terms of maximum limits. Maximum limits are a really fun thing where insurance companies say, whoa, we have paid a lot of money for your cancer treatment and it's gotten a little bit too expensive. So we're done now. Good luck. And this wasn't eliminated, but there were some new rules that were placed to help some people so that the insurance that they paid for would actually do something for them if they did indeed need it. It's a lot like dental insurance today where they're like, oh, we'll pay like $2,000 a year. But what if I need a root canal and it's more than that? And they're like, oh, you silly fool. And then they hang up on you. Okay, it's fine. Totally different scam, but again, different tangent for a different day. Back to our current tangent. Another thing that happened in 2011, the Affordable Care Act prohibits rescission when an insurance claim is filed, except in the case of fraud or misrepresentation by the consumer. So basically what this means is the insurance company cannot say, never mind, we don't cover that anymore when they get the actual bill, unless you lied, and then they can, and that's on you. So also very good. Oh, my surgery turned out to be more. Well, that was more than we expected. All right, that's your problem. That doesn't fly anymore. And finally, insurance companies provide a process for a customer to be able to make an appeal if there is a problem with their coverage. Because if you are a customer of a product, it just makes sense to have a customer service branch, don't you think? Where you could say, hi, you said this was covered. Now you're saying no. And before that was just like final. And now you can call and fight with them, which is, if you've ever had anything medical done, I'm sure you've utilized this feature and called and fought with them and be like, you said you would cover this. And then they were like, no. And you say, I'm looking at my policy. It says you cover this. And then they said, oh, we said we cover required prenatal appointments. And the only required one is the one where you show up and you have the baby. Not that I'm talking from personal experience. I'm not angry. It's all fine. That wraps up the 2011 changes and brings us to the next goal. Changes that must be in place by 2014. In January 2014, the health insurance exchanges are now operational. Kind of. It was a new thing and they had quite a few technical problems along the way, understandably. But also you had a while to prepare. Like, what were you doing? And people can buy insurance on the marketplace, and small businesses can now get tax credits up to 50% of the premiums they pay on their end for offering employee insurance. Note that, in case you aren't familiar, both the employer and the employee pay premiums for health insurance. I don't know if I've mentioned this before. The employer pays some of it and you pay the rest as an employee. It kind of depends how much, based on how much the employer wants to pay. But basically what that first one was saying was, you can, as an employer, if I offer insurance, I can get 50% of what I pay as the employer back. So a little bit of a kickback to small businesses to say, please offer insurance. In January 2014, people buying insurance on their own get subsidies to help them pay for their monthly insurance premiums. So let's say you are buying insurance on your own because your employer was like, no, that's too expensive. We don't have enough employees that it's mandated. I'm not going to offer it. And you want a plan and it's $1,200 a month. You will now be offered some kind of money back to help you cover that cost if you qualify by putting in all of your financial information. It's also important that in this this was now rolled out that the health insurance premiums in general are going to be on a sliding scale. The more you make, the more you pay. The less you make, the less you pay. Any individual making over 400% of the poverty line, which was $43,300 at the time, does not qualify for subsidies though. So I do not consider that an extraordinarily high family income. I don't know how you're supposed to make that. Pay for your family, have all of your necessities, pay for healthcare, pay your rent or your mortgage, pay this, and then by the time you actually pay for it, then you also have to meet your deductible if you want to use it. We really dove into that aspect in the second video of the series, which I'll leave both linked below. But yikes, just yikes. Thankfully, as people realized what a big yikes this was, subsidies would start to change a little bit because they realized like this is impossible. Like this is not going to work. And no one bought it, and then they got fines and it was a mess. But that's how it started. So some people got money, but not if you made more than 40 grand. Here's what's not a yikes though. It was at this time that insurance companies are required to provide health insurance to any adult aged 19 to 64 who applies for coverage, because at 65 Medicare takes over. Even if they had the nerve to be born or develop a medical problem somewhere along the line. Can you believe it? So now you can have health insurance if you have a health condition. That's awesome. Here's a kind of a catch. In order to prevent people from waiting until they got sick in order to buy health insurance, the ACA requires all Americans to buy health insurance if they don't qualify through Medicaid or Medicare, or they have to pay a fine. The fine starts at $95 for an individual in 2014. And then it goes up every single year until 2016, when the fine is either $695 or 2.5% of a person's annual income, whichever is higher. However they can get more money. So now, if you still cannot afford healthcare through the marketplace, or you don't want it because you would never be able to afford to pay for using your health insurance because the high deductible plan is like crippling. So like you can't afford the premium, plus you're like, if I bought this, what would I get? Because then I can't afford my deductible. You decide I'm just going to go without it. Roll the dice on that. So now those people who are in having to make that choice of like, I guess I don't have healthcare, are now going to have to pay this fine. It's not at all like the entire reason you are being financially punished has anything to do with the fact that you are financially struggling. Yes, we should definitely fine those people for more money because they obviously have a ton of it. Make it make sense. Anyhow, one last thing that happened in 2014 was the pre-existing condition insurance plans that were initially introduced in 2010 that allowed people who, remember, dared have medical diagnoses be allowed to buy very expensive sick people insurance. Those were going to disappear since everyone now had to be offered a regular human plan, which allowed you to have a few flaws. You just had to pay a little bit more for them. How wonderful. And that's the very, very basic rundown of the original requirements of the Affordable Care Act. I told you it was complicated. And there are many, many more addendums and things that were added after the fact, and they will get their own video because I don't want to make it too overwhelming, even though this is probably already quite long. But here is a quick summary of what we learned today. The Affordable Care Act, or the ACA, it sought to improve individual access and quality of healthcare through doing the following things. 1, implementing coverage standards to prevent insurers from discriminating against or charging applicants higher premiums based on pre-existing conditions or gender. Wonderful. We can now have an illness and be a woman. It's a good day. 2, the ACA also eliminated waiting periods. The employee-sponsored plans would normally impose, usually they said you have to wait a certain amount of time, especially if you already dare to have high cholesterol before your insurance kicked in. They said, no, friend, hired and your job comes with health insurance. You don't have to wait to use it. 3, providing health coverage to any applicant who can afford it, regardless of their health status, age, or income, is now going to be required. Unless you don't make enough money to buy any, and you also don't qualify for Medicaid because you make too much to qualify for Medicaid, but not enough to buy it. I'm sorry. And then you have to pay a fine. I'm sorry. Cannot contain the snark. 4, mandating minimum standards for employee-sponsored plans offered by large employers. So basically, people saying if you work at a huge company, you cannot only offer catastrophic plans. Maybe. You can offer high destructibles. That was a That was a Freudian slip because it is quite destructive. You have to offer something of mild quality, is what they were saying. High deductible plans still totally fine. 5, the ACA eliminated lifetime benefit limits and annual benefit limits so that they can't just stop paying for something in the middle of the year because you were too expensive. And 6, requiring health insurance plans to include essential health benefits like preventative screening. If you look at that list, you're like, what was it before? Thank you so much for learning with me today. This has been depressing and fascinating to learn about, and I appreciate you taking the journey with me. If you have made it this far and you haven't subscribed, please do that and like the video. If you gained any value from it, consider sharing it with someone else who might need to learn a little bit more about this topic or who might find it interesting, or leave a nice little comment. The YouTube gods love all of those things, and so do I. Also, if you have any questions about the Affordable Care Act, please leave them below and I can incorporate answers into an upcoming video. I look forward to continuing to figure out this mess of a document and entire system with all of you so that we can understand it and fix it. Until next time, my friends, stay healthy, and as America likes to say, just don't be poor. See you later, friends. Bye.